Okay, Gris Bettle with Guaranteed Rate Affinity. Thank you so much for joining me.
So good to be here. Thanks for inviting me. This is awesome.
So we're going to talk just kind of high-level mortgages today. Tell me about how long you've been in the mortgage industry.
Oh, goodness. I've been in the business since 1998, and I started out with SunTrust Bank, so that was a good start to my career.
Okay. And how long have you lived in Sarasota?
Since 1984, excluding college years and a couple of years post-college. But yes, once I went somewhere else, I just knew it was time to come back.
Okay, well, tell me a little bit about what you see affecting the trends in mortgages today.
Well, today specifically, and this era of tariffs, do we have big tariffs, little tariffs, what's going to happen with the economy? That's a variable that really no one has the right answer to. But bottom line, rates have held steady in the high sixes. There's some days it might get down to 6.5, some days up to 7, but I think we have to plan on rates staying at 6.8. We'd like rates to come down, but 6.8, it's not as good as it was, but it's not horrible.
Right.
But that's kind of certain right now.
Yeah. And overall, those little changes in the rates aren't going to make a huge difference when buying a home, right? Like, do you just suggest that, because we're not going to see any major drops coming forward, that it's probably a pretty stable time for someone to look into buying?
Yes. Listening to the media, you're not going to get, that conversation of rates are stable, everything's fine. They're going to be like, oh my gosh, there's major movements, but they're really, in the end of the day, they're not that much moving.
Okay.
So we're pretty stable.
Well, let's talk about a couple instances that I know I've had come up in my business recently, and you've been able to help my clients navigate. The first one is maybe someone that doesn't show a ton of income, but they have assets.
That's right.
Do they have options for getting a mortgage?
Yes. Actually, it's probably the most common customer we have in Sarasota, because you have people that are retiring down here, or they're about to retire, and maybe they've even cut back on their job. But yes, it's very, very common. So if there's assets, there's a bunch of ways to qualify them. One of the easiest ways is called asset depletion, where we just take the amount, let's just say it's $1 million in retirement accounts or whatever accounts. We just divide by 84 months and we make that part of your payment. So that's like an extra $12,000 a month on paper.
Oh, wow.
To help them qualify. That's the easiest. Huge. Customer has to do nothing. The rate is very close to the very best rates possible, and it's just easy peasy. Now, there's other things we can do. If you have an IRA, you can start a distribution, and as long as it lasts at least 3 years on paper, then we use that as income. So there's a lot of things we can do for sure. Right. And one cool thing is, if they're buying an investment property, maybe someday, years down the road, they'll move into it. They want to get in this market and then eventually get down here. If they're going to rent it for the first year, we can use the potential rental income from that property that the appraiser says, then use that to help them qualify.
We just did that for a property on Siesta Key.
That's right.
Yeah, so there's all kind of things we can do.
So I love customers with assets because I just know we're going to find a way to get them done.
Exactly. Yeah. Well, you always find a way. Let's talk about investment, because we went there for a minute. What kind of rates? I feel like typically we think investment property and we think the rates are going to be super high.
Yeah.
But that's not what we're seeing right now necessarily.
Correct. Well, there are two things going on. Is the non-conforming market. That means the private market, meaning not Fannie Mae, not Freddie Mac, not FHA or VA. Okay, so it's non-conforming, and these hedge funds, these bond funds out there have realized that if you can afford a $500,000 and up investment property, you're probably pretty strong financially, and these are good loans. They still require at least 20% down.
Okay.
But yes, there are so many ways to get the interest rate almost better than primary residence. Now, this is a funny thing to say. I always laugh before I even start this with my customers, is there's a great feature. Before, it was a really bad thing, but now it's a feature. If they think they're going to hang on to the property for 3 to 5 years at least, we can add a prepayment penalty. Now, That sounds horrible.
That's counterintuitive.
Yeah, because if you do a prepayment penalty, if you sell it before the time's up, whether 3 or 5 years, what you choose, or you refinance it, then the penalty kicks in. Okay. So now it used to be horrible. This is pre-2008. A prepayment penalty was 6 months of interest. So on like a $400,000 loan, it's like $36,000. It was horrible. But now it's graduated. So if you do a 5-year prepayment penalty to get your rate to like 6.8%, then it's 5% the first year, 4% the second, 3, 2, and 1% the last year. So the fourth and fifth year is really not that bad.
And 6.8%, I mean, that really is comparable with what we're seeing for primary.
Absolutely. Now, anytime I even say a rate, out there in the ether, I have to say excellent credit, short locking period, and all the different factors that go into a rate quote. So yes, I'm highly regulated business.
That's true. And thank you for saying
So we're speaking in general terms.
Yes, very generally. It's just interesting to see generally rates for primary homes in line with rates on investment properties.
I know.
So a lot of opportunity here in Sarasota. Are you seeing those mostly on Siesta Key, or have you done a lot of those in a certain area?
Well, Siesta Key definitely has a good mix between primary, second home, and investment, especially the condos like we did on the water. So that's definitely, Siesta Key is a very special place. And it's funny, side note, sorry to go on a tangent, but, I'm a big boater in the area. And whenever I go to a different beach that's not Siesta Key, I'm like, the sea is a little bit browner, a little bit stickier, and you got to really rinse it off, So Siesta Key is very special. So you said those words, it just took my brain somewhere else. But yeah, Siesta Key is an incredible this cornucopia of real estate product and loan products.
Yeah.
But but for Lombo Key, you get a lot of second homes, some primary, but not a ton of investment. More to second home people. And
right.
Each area, as you know, has a different feel.
They do, yeah. Each island, each part of town has its own.
Like downtown's got a lot of primary. But I always question that primary because, you're walking around at night in downtown and you look up the condos, there's not a lot of lights on.
Yeah. Well, primary technically means 6 months in a day.
That's right.
So
That's right.
On a lot.
Right. No state income tax.
Right.
So, yeah.
Awesome. Another deal we did was a condo tell on CF.
Oh, yes.
So that requires a little bit more down, but the pros for my clients were that they have the management company on site. So they live in a different state and they're getting this professionally managed for what I found to be a pretty reasonable fee. And you help them close that loan.
Yes, that was a major win. High five for that one. That was incredible. It was worth the effort because that is unique. And this is a whole different topic, but this is important. If you got buyers buying condos, especially waterfront, large condominium complexes that are probably more than 10 units, they're going to have an issue these days with wind coverage, insurance, master insurance coverage versus building coverage. Now, building coverage is traditional fire, just anything that's not wind related. And of course, wind is, when we get our name storms.
That's a big topic, right?
So most lenders on this particular deal we did would not do the loan because there was a gap, because the marketplace, the insurance marketplace, just would not cover, up to 70 million in loss on wind. So it would cover, in this case, round numbers 50, but the building coverage was at 70. So we got an exception, which wasn't hard to get once we had the right information to say, look, this is max coverage. It's a very well-managed community. Most of them are, wouldn't you say?
Yeah. And
if it's well-managed, they have good reserves, they're keeping up with maintenance, then we will do the loan. It's great.
Now, I've seen it on the other side where I was representing the seller and the buyer came to me and, had their mortgage officer and it, was flagged for some reason or another, as they often are.
Yep.
And he could not navigate around that, right? So it's always good to get a second opinion or to talk with someone like you that's been in the industry for a long time that really knows the ins and outs of
You call me old?
Management. I'm trying not to. That was my nice way to say it.
That's
Experience.
Right. That's right.
Very wise. But really, truly, the way that you knew the industry and the insurance industry and, everything start to finish made the difference in getting that closed. And I've seen things fall apart for less. So,
and the customer was amazing and happy. So that was great too.
That's really what we're aiming for, right?
That's right. Yeah. You tell me from the realtor side, I'm sorry, you're asking the questions, but when you have a reasonable buyer, a reasonable seller, magic happens.
Magic happens. Good vibes all around. That's what we aim for.
Yes.
Yeah. Even if a little stress is in there, everyone has the same goal in mind.
That's right. Well, nothing worthwhile is easy, right?
Right. That's true. So I have an interesting question. Even though you're mostly working when someone goes to buy a home, do you have advice for sellers in this market when homes are sitting on the market for, over 100 days?
Yes. Well, I might say some things here that aren't very popular in the real estate realtor community, but you asked and you can edit it out if you don't like it. But they have to be reasonable on price, because once the realtor has done the staging, the marketing, and done everything that needs to be done, the open houses, when I say price, we're in the upper end market here. So doing financial incentives to buy down a rate, that doesn't necessarily work in the upper end.
Right.
And, homes that are priced right. I mean, you tell me that they're moving, right? Homes that are priced right?
Yeah, they definitely are. And it's homes that I think have something unique about them are moving.
Yeah.
And you're totally right that there's kind of two sets of buyers. So in the luxury market, we don't see rate buy downs.
Right.
But anything that's maybe $500,000 or less, you can almost expect that seller is going to be offering some credits to the rate buy down. Correct?
It's wonderful that the market is now educated and knows it. So they're like, what are you talking about? Paying buyers closing costs so they can buy down the rate? What does that mean? But now most of them do understand.
Yeah. I have some investor clients that have various properties all over Sarasota, and we're talking about putting the next one on the market. And I just put it into her net. I'm like, this is going to be the price. That's where we hope to sell it. However, you're going to have, about $10,000 in closing credits to the buyer, and you can just expect it.
That's right.
So
That's right.
We do work in the luxury market, but also, it's good to know all the markets in case
And one more thing to add, I'm sorry.
Yeah, no, go ahead.
Is on the luxury market, again, this is just my, unsolicited thought.
That's why you're here.
Is if you're a seller that's not selling, just maybe if you can't be unbiased, get someone trusted, but try to be a buyer for your home.
Yeah.
And say, okay, I want this. Look at this. I mean, you can't see the whole house in the video, but this is a gorgeous brand new house. We're on Siesta Key right here, and it is amazing. So, but there are other homes that might be similar in price range or have similar features and maybe a similar location. Try to be honest and say, if I'm a buyer, I'm going to spend $4 million. What can I get for that?
Yeah.
And then once you see what your real competition is, then you got to decide, okay, do I want to wait for my competition to sell and then I'm the next lowest, or do I want to be aggressive and get in there and be the lowest? So that's just a thought.
Yeah, that's a great thought.
I'm the mortgage guy. That's your side. But you asked what can sellers do?
Yeah, well, I think that's great advice.
I can be the bad guy.
Yeah, you're the no fun guy. You
That's
can't
right.
afford this, sorry.
That's right.
Just kidding. You always find a way to make it work.
Yeah.
Okay, so this is everyone's favorite question. Are we going to see rates in the threes in our lifetime?
Well, yes.
Oh,
In our lifetime, but unfortunately, something really bad has to happen for that to happen, because last time was COVID, and the last right from the fours in the last recession we had after 2008.
Okay.
Rates got in the fours, so those were two bad things. I was an econ major, so that's more being a history major, almost the history of economics is really what being an econ major is, so no one's ever met a rich pessimist, so I always try to focus on the positive. If something happens, there's opportunity. So, but typically something bad economically has to happen to get that low. But if you have a slowing down economy, which isn't a bad thing, this is kind of a soft landing. You may have heard the term. Rates may get in the low sixes, high fives, and that's awesome.
Yeah.
But for threes, that's going to be shock and awe. So it's going to hurt somebody. So
Interesting.
So yeah. But who knows? And you probably want to edit this out too, but my biggest worry is if we get to a tipping point where our debt, the bonds that are being issued to finance the government, the federal government, if that gets too much, then bond investors are going to demand a higher rate for a riskier return. And then that'll take rates up, that'll lead to something, and then they'll go back down eventually. Because, Americans politicians tend to do big dramatic things when they have to, not proactively. But that's sorry, you want to change in there.
Okay, all right. Well, yeah, it's all cyclical. That's just good to keep in mind. History does repeat itself. So
yes.
I guess, eventually rates will come down.
But a quick answer to your question is, I wouldn't count on those happening anytime soon. Okay. Let's just, if you plan on 6.8 and we get lucky, they get to 6.5, 6.25. Right. That's wonderful.
Yep. Great. Okay. Tell me what the best part about living in Sarasota is.
Oh, goodness.
Years again.
Yes.
Without Morganton.
Yes. Again, I'm going to say something that is kind of cool, but if you are a couch potato, it is not for you. Because there's so much to do outside. You can do anything water related. There's biking on Legacy Trail. I'm into kite surfing, so I love that, and boating. But just going to the beach is amazing. There's so many things to do. Marine's exciting. I mean, that's the thing is, if I take my kids other places to visit family or whatever, and they're like, "Oh, it's so boring."
Yeah, I know. For a relatively small town, we do have so many things to do here.
Yeah,
and a lot of them are free, like public parks and beaches. So
absolutely,
we are so lucky.
Yeah, our parks are incredible. They're kept up so well.
Yeah. And I was so lucky to get to chat with you today. Thank you so much for being here. And we'll see you soon.
You are awesome.
Bye.
You betcha.